Hey, what's going on, everybody? It's Kurt Naderveld, the CEO of Rainstar Capital Group. I'm excited today to be here in the studio with Paul Damon, one of my good friends. He is the president of Family Capital Management here in downtown Grand Rapids, Michigan. And Paul, welcome to the set. We're excited to go through everything with you today. Listen, today's focus for this video is going to be talking about when you go to sell your business, okay? As most folks know right now, private equity and the capital markets and the business world, there's a lot of different things going on, especially with coronavirus, right? Yeah. And one of the things that we want to talk about today is when you do go to sell your business, how can you be intentional and how can you be strategic when you get the proceeds from that sale in regards to then continuing to build wealth, right? And this is what this guy, folks, knows a lot about. So I'm excited, Paul, to kind of get your insights. So our firm, just as a quick backdrop, Rainstar Capital Group, we're one of the larger national debt advisory groups here in the space. We help companies grow their business by helping them access the liquidity that they need or the debt financing. We provide debt financing for commercial real estate, corporate finance, small business, and equipment situations where the businesses need that capital above and beyond the bank debt that they have access to be able to grow. And once you grow your business and you have that opportunity to sell, obviously you can sell and get a good liquidity event, hopefully, right? Especially in today's market and the multiples that businesses are going for. And so what we wanted to get Paul's feedback on today was once that business owner sells, right, Paul? What are some of the intentional steps that they can take to be able to then build a wealth plan, to grow grow their wealth once they've exited their business and now have this lump sum of cash?
Correct. Yeah. It's really difficult because when you're running a business, a lot of times all your capital or a majority of it is tied up in the business.
Correct. Yeah.
And oftentimes there's not a lot of other investments or experience with investing outside of the business.
Right.
And so when you sell, there's this liquidity event. Oftentimes there's cash. Now sometimes there's a lump sum up front and then a trailing income.
Correct.
Or sometimes it's all up front. Taxes are a big factor.
That's correct.
80% of business owners a year after selling have said that they're extremely unhappy with what they got from the process.
Right. Hindsight's always 20/20,
exactly.
right?
And taxes are a big part of that. The two reasons. One was taxes. And the second is they didn't have a what's next.
Right.
And we'll talk about both of those.
Right. So you mentioned obviously that when the business owner goes to sell, it's a big event for them, right? It's emotional. They've spent years of their life building that company.
Exactly.
Right? And so obviously when they go to sell the business, they're going to look to get max value, right? But then, like you were saying, they have to be intentional. I think intentionality.
Have a plan, right?
Exactly, right? And so when that business owner does go to sell, right, what are some of the strategies, or when you work with your clients, how do you help them to make sure that they, that they don't have buyer's remorse, right? Where basically, that they sell the business and, they're excited about that, but then they look back and they go, oh boy, I could have done better type thing, right? What are some of those steps that you recommend?
Well, the first and most important is a cash flow analysis.
Yes.
They have to analyze what they're going to get from the sale, what they're going to pay in tax, and what they're going to net.
Right.
And then with whatever they're going to net, what is their number, which is how much return do they need to get to get the income that they're going to need or want. So having a strategic plan and knowing your number is very, very critical. And to do that, you have to do cash flow analysis.
For sure. And after you do that cash flow analysis, Paul, then what is kind of the next step that you help a client understand and look through?
Then build a portfolio that will help you achieve that number or that cash flow you need within the risk tolerance that you have. So you might say, well, I can generate 8% a year return. But to do that, you've got to take a lot of risk. So we use some tools and processes to measure that risk and give you an idea of how much volatility you're going to have to get that number.
Great point. Something that everyone watching this video really needs to pay special attention. That's one of the things that I appreciate Paul, right? We call Paul the wise guy, right? Not necessarily
I'm the old guy. I'm the old
the wise man, right? Because he, his years of experience advising, right? Very successful entrepreneurs, very successful CEOs who, when they exit their business, again, they need that expertise, right? Sometimes in life we don't know what we don't know, right? And be able to have that strategic team behind you really provides a lot of value, right? So Well, good. Well, thank you so much, Paul. I appreciate your insight. And,
thank you.
Thank you for taking the time to watch this video. Listen, if you're looking for advice on either how to grow your business, if you need the capital to do it, if you need the wisdom and the advice and the guidance on, once you do look to sell your business, what to do with that excess lump sum of cash that you get, which is a great thing, by the way, Paul's the guy to check out. And we'll have his contact information, my contact information on the bottom of this video. And you have a wonderful day.